our Megan Casella. President Trump is making some new comments regarding tariffs, so we'll get that now. Megan, what are we learning?
Hey, Scott, so a big moment here in the Oval Office. President Trump is speaking with reporters and taking several questions on trade as well as other topics. And on tariffs, for what might be the first time by my count, he is appearing to offer some flexibility when it comes to those April 2nd tariffs. He was asked specifically about whether he will be offering any exemptions or exceptions. He said that many people, many companies are coming to him and asking for that. And he referenced how a couple of weeks ago he offered the auto companies some relief when it came to Canada and Mexico. When it comes to April 2nd, he said, and I quote, "There will be flexibility." So he was emphasizing that he's not changing his mind on the tariffs themselves, but he said for what I think is the first time that there will be flexibility when it comes to exemptions and exceptions. He was also asked a couple of times about China specifically, whether there was anything that China or Chinese President Xi Jinping could do to either head off additional tariffs or reduce the 20% tariffs that President Trump has so far added. He said we can talk, and he also said he'll be speaking to President Xi and that they have a great relationship. So not committing there to making any changes on the China front, but also, again, opening the door and allowing potentially some negotiations, some flexibility on China as well. So a big moment here. I will say that for company, for industries, and for investors, this should come as a major, I guess, sign of relief, or if perhaps that's too premature, at least a window of opportunity here to potentially see some changes between now and April 2nd. Scott?
Megan, thank you. Megan Casella at the White House for us. Weiss, I mean, that's why we raise the issue of whether, you know, the bark is worse than the bite, because you just don't know. Yep. Whether a social media post which says Liberation Day is coming, these tariffs are coming, but then as Megan was reporting to us, the idea that the president says there will be flexibility, quote unquote, we can talk, you're just not really going to know until the second, which in some respects, I would guess, puts a paralysis, if you will, on investing decisions.
Not only on investment decisions, but on capital expenditures from companies. So you could say, okay, maybe the market's got it wrong, maybe it's too pessimistic, but ultimately this is feeding into the economy. As is
market's off the lows, by the way.
I know, nicely off the lows. I've been watching, and there's a stock I want to talk about there, which has been doing quite well.
Just do it now.
Meta. So Meta seems to have bottomed. If you take a look at it yesterday out of the gate, it was up over 4%. Now, when the market sold off, it came down. But we see the constant move higher or lessening losses today, and Meta is front and center. The other one that is Netflix. Netflix continues to act well. So those are sort of somewhat, as much as you can be, insulated from the tariffs, insulated somewhat from the economy. Don't forget with Netflix that you can go to their ad-supported model. You're not getting rid of your streaming because you've cut the cord already. So, you know, and the other factor is, look, I think there's too much focus on will we be in a recession? That you can wait to decide on that. When you're in a recession, you come out of it. It's what's the direction? Is it the direction of a higher economy or a declining economy? That's what I'm focused on. That's what I continue to see. And earnings that we're seeing today from the retailers and what we've seen are just a microcosm. Expand that to the S&P at large. So that's why I'm not putting money in.
Well, I mean, Joe, China tariffs are the greatest wild card in this whole conversation because of the importance that China plays in the global economy relative to the companies that we have here that rely so heavily on it.
Yes.
Like an Apple. Let's do an intraday of Apple. I want to see if there's an intraday move on the headlines. You can see the NASDAQ's bouncing. Theoretically, you've had a move in all parts of tech. There's Apple, for example, which gives you a good idea of maybe some of the relief from the commentary out of the Oval Office today.
So I think one of the reasons why that Bank of America flow study shows that investors continue to buy equities is I really think when people think about tariffs, they view tariffs as nothing more than a transitory variable in which it's a negotiation. I don't think people actually believe that these tariffs are going to stay in place for an extended period of time. And think about it, two of the largest exporters to the United States, Germany and China, both of their equity markets are up double digits year to date. So I think there's this skepticism, and the overwhelming consensus believes the tariffs are really not going to be put in place. And if that's the case, okay, then you could look at equities here and you could potentially find some opportunities. But I'm just concerned that we might have already done the damage as it relates to what we're going to hear in the upcoming earnings season.
I don't understand what you're saying. Are you saying that even if tariffs come on, if they get applied to the imports, that they'll go away, they're temporary?
I just said that, yeah.
Well,
temporary.
I disagree, and that's in fact not what's not occurred. If you look at the tariffs that we put on China, they came in during Trump's administration, and they continued through the Biden administration.
I understand that. I'm back from Florida. I'm nice and relaxed. I'm not looking to argue. I'm telling you. Just listen. I'm telling you the reason why I think people are still buying equities, because I think that the consensus thinks that the consensus has skepticism that these tariffs are nothing more than a negotiation and temporary, that they're not going to
Joe,
be
I
there for
understand
an
not wanting
extended
to
period.
argue. This is not an argument, and I suggest you go back to Florida if you don't want to have any discussion. But here's the story. The story is you said tariffs won't be permanent. Tariffs have been
not going to do this
permanent.
today.
Tariffs have been permanent on China,
Weiss.
number one. People aren't buying stocks. Stocks are continuing to go down.
Steve, we just did a Bank of America study that showed fund flows. People are buying stocks. Like, listen to the show.
Where do you see it?
Scott just read
the
it.
markets?
Listen to the show.
Where do you see the markets?
I know the
First
market's
of all,
down.
show me what the correlation is between the fund flows
So then
that
why
he
are we
talks
reporting
about
it?
and the market. Because
So then
it's
when
an
you
interesting
mentioned
data
it,
point.
you should have said, Go ahead, Josh.
I want to ask Steve, so I'm a little bit on Joe's side where I think the market is looking at tariffs, look, not in every individual stock, but just generally speaking, as right now a temporary annoyance similar to like currency fluctuations. Like, we get it. It's not going to be great. It's a lot of our earnings uncertainty for this particular quarter, but maybe not a risk to full year numbers yet. And my evidence of that is like, why is Apple not 180? Why is it 214? If we really think this is going to be a full year phenomenon. I also think there's some realpolitik going on, and I'd love your take on it. Like, Elon Musk makes half his cars in China, and China's his biggest market to sell into. Does Trump seriously want to torpedo Tesla's auto business over this for the full year? It just seems unlikely that we are fully pricing in these tariffs. I don't think the market believes it.
That's what these charts would suggest. Weiss, is there's going to be some level of détente, and you're not going to have.
Look at 6-month VIX.
Look, I'm
not pricing this in for a year.
Okay, but let me come back at it this way. First of all, I agree with what you're saying. Maybe the magnitude, like we saw 200% tariffs, we knew that wouldn't stick, right? 25% tariffs aren't going to stick. But let's take a look at Booz Allen, for example, right? People started buying. They said, oh, this is overstated. So they took the stock up from 110 to 120, right? So they discounted completely. Then what happened? Then what came out from the DOD was that the top 10 firms have to talk to us about every contract they have, and the stock traded down 20%.
But isn't that more representative of those types of stocks that we're facing that kind of headwind?
It is like representative of those stocks.
If I said to you, okay, let's assume that what the president says, there will be flexibility. Let's say that there is flexibility, and we don't get. I know, you don't believe that, but let's just say that there is well, I can see it on your face.
I'm saying I don't believe anything Trump says because he's shown not to live up to his word.
Well, let's say in this instance, there will be flexibility as it relates to China. If I told you that that was the outcome, the market likes the prospect of that happening. Do you buy what was the magnificent to mediocre, now 7? Because those are the stocks that are moving the most.
That's always been my case. Buy the Mag 7 because they're insulated, with the exception of Apple. I'm not buying Apple. I sold Apple. But I just mentioned Meta. There are some other issues in there that relate solely to certain stocks like Google. Google is losing share in search. So you can't buy them blanketly like you could a year ago or 2 years ago. So I think it's really bottoms up. It is syncretic risk in each stock that you have to take hold of. But, you know, you take a look at Europe. Europe is preparing. Take a look at Canada. They are preparing for some tariffs to be permanent. But what they are preparing for is an environment that is encroaching upon them in terms of not being very stable, that they don't know where the U.S. is going to go. So it's forcing them, for example, to approve $1 trillion spent in Germany. It's not just defense.
No, but that's why people,
right?
That's one reason why people think there's better stock market returns coming out of Europe.
Right, so you can't have both ways. You can't say that the U.S., hey, we're just kidding on tariffs, and have Europe, you know, do what we're doing. And by the way, onshoring has been a trend since COVID. It's been a monster trend.
I understand that, but why do you think the president is talking about flexibility as it relates to China? Because China is a much more important market in many different ways than the whole of the European continent is.
Because he's responding to what people have said to him. He's responding to what Musk is whispering to him. We'll see if it happens, right? There's lots of things going on there. I mean, you give him, according to the Journal, you give him Musk access to our plans against China, defense plans. So obviously Musk has him wrapped around his finger, so maybe he does protect him in China. But it doesn't mean the Chinese people will still be buying the cars.